Good day and welcome to Business Points. Today on the program, we'll take a deep look at critical 5 major economic developments that reveal both the fragility and the potential of Nigeria's economy. The stories are not just isolated headlines, they are interconnected indicators of how Nigeria produces, earn, spends, borrow, trades, and protect its future of its citizens. My name is Ubong Osoro, and I'm saying welcome to Business Point. Today on the program, we look at Nigeria's ballooning textile imports despite revival promises, a fiscal crisis where salaries and debt service exceed government's revenue, the push by investors to concession the Lagos-Calabar Coastal Highway, and we'll also look at Nigeria's customs strengthening ties with the American Business Council, and finally, PENCOM's recovery of unpaid pension funds. Together, let's raise this issue, and one of the things that is very fundamental about Nigeria is Nigeria building a productive economy or managing decline through borrowing and import. Welcome to the program. Let's go for a short break, and when we're back, I'll take you deeply into all of the business stories that we'll have for you today. My name is Ubongo Osoro, standing in for the Queen of Business, Kike Lomo Okere. We'll be right back after this short break. Alright, so this is Business Points. The first story we take this morning: textile imports hit 814 billion despite government revival promises. Textile imports hit 814 billion naira despite Nigeria's government's revival promises. Alright, so the Nigerian textile imports have climbed to an average of 814 billion, a figure that starkly contradicts the repeated government assurances of reviving the local textile production. The historical importance of textile, let's look at some of these things. The textile industry, once in Nigeria, formed the backbone of Nigeria's industrial base. In the 1970s and 1980s, over 180 textile mills operated in Nigeria. The sector employed at the time more than 500,000 workers directly. Millions more depended on cotton farming, transport, tailoring, and retail services. Alright, so we had that before in Nigeria. The textile industry supported the rural agricultural livelihood, urban industrial employment, export earnings, skill development, and cities like Kaduna, Kano, Aba, Funtua, and Onitsha thrived as textile centers. But there's been a decline, and this decline did not happen overnight. It has resulted from chronic electricity shortages, forcing factories to rely on diesel, high cost of production compared to Asia, influx of cheap imports and smuggled fabrics, weak border enforcement, policy inconsistency, and lack of long-term industrial planning. As factories shut down, the Nigeria transitioned from producer to importer of a textile. All right, so when successive governments has tried to revive the textile industry in Nigeria, we've had the Central Bank of Nigeria throw in the intervention funds. We've had the Cotton, Textile and Garment Policy, CTG policy, I beg your pardon, by the government. The Cotton, Textile and Garment Policy, the CTG policy of the government. We've had import restriction on finished fabrics. The Anchor Borrower program of the Central Bank of Nigeria for cotton farmers was also an initiative to help restore the textile industry in Nigeria. Yet imports in that particular industry continues to rise. And some of the issues that have been raised as to why there's a lot of importation in the textile industry in Nigeria has been Asian manufacturers benefit from scale, subsidies, and efficient logistics. So it's easier for this textile to be produced in Asia than what we have for when you compare to the price you get from Nigeria, because a lot of the people in Nigeria have to rely on diesel that will ultimately go into the cost. So business people are looking at what is the lowest possible way I can still make profit, what is the lowest possible way I can go ahead and get sales, make all the sales and still make profits. There's been issues containing smuggled textile, where people smuggle textile to evade taxes and tariffs. So there's also been local producers facing unreliable power and infrastructural deficits in Nigeria, weak enforcement undermining protection of this policy. And this has actually cost us a lot. There's been a massive foreign exchange leakage, loss of manufacturing jobs, weak industrial GDP contribution, failure of agricultural industrial linkages. All right, so without fixing power supply, logistics, finance, and border governance, industrial revival may remain rhetoric at the moment. All right, so textile import in Nigeria is at 814 billion naira, despite all of the things that the government has done to revive that particular sector. I mentioned the cotton, textile, and garments CTG policy that was implemented by the government, the Anchor Borrower Program, trying to restrict the importation of finished fabric products, but there's still a lot that people are importing into the country because Asia seems to be easier and cheaper than all of this. So, but let's talk about the hubs that we have in places like Kaduna. I remember Kano was the center of textile industry in Nigeria. Kaduna was doing very well. Aba was a thriving textile hub in Nigeria, Onitsha. And just the 1970s, 1980s, we had these industries, and now we are spending our hard-earned forex in the country, 814 billion naira that would have gone into the industry, that would have gone into the industry in Nigeria, created more jobs, both directly and indirectly, impacted in the corporate social responsibility and corporate social investment that these companies will do. And all of this money is spent abroad trying to get textile fabrics into Nigeria for the clothes that we wear. And this is just a systemic thing. Yeah, the government has actually contributed a lot to reviving this local textile industry, but this is where we are at the moment. We are still importing largely, and this is big money, 814 billion that would have gone into Nigeria's economy. It's been spent trying to import textile from Asia, from different other countries into Africa and into Nigeria at this time. Nigeria once was a textile hub of Africa, and now it is contradicting repeated government assurances of reviving local textile production. And this is one of the places we need to look at. We're already sorting out our petroleum with Dangote refinery coming in. Can we have our textile industries run again in Nigeria? Can we have state-sponsored support, right? There's been a lot of support, but can we have a massive, large-scale support to be able to end this problem once and for all? And the backbone of Nigeria's industrial base in the 1970s and 1980s, with over 180 textile mills operating in the country at the time and employing more than 500,000 workers, both directly and indirectly. There's a lot that we can actually do. The farmers, those who are in tailoring, transport, retail, agricultural services, urban industrial employment, and the people that were employed in these different cities all across Nigeria. There's been a collapse, and we are still seeing the symptoms of that particular collapse. But let's take another story now, as we hope that the intervention that the government has done, because there's been a lot of intervention in the textile sector, can actually come up with the subsidies that we've had, the Anchor Borrower Program. That sector can once again contribute to Nigeria's Nigeria's image, because this is loss of manufacturing jobs, weak industrial GDP contribution. There's been a failure of agricultural linkages, and a lot of issues mentioned, right? Power supply, logistics, finance, border governance. But we need to see this sector come back again to life and thrive, and not just come to life, be a sector that will be very robust to provide employment for a lot of Nigerians. But let's take the next business story that we have for you this morning. Salaries and debt service consume 105% of government revenue. All right, so salaries and debt service consumes 105% of government revenue. So the Nigeria's fiscal condition has reached a critical point. Official data show that personnel costs and debt servicing now consume 105% of government revenue. So what this means is that in practical terms, Nigeria's government earns, if Nigeria's government earns 100,000, they spend 105 before funding development. Borrowing fill the gaps for other sectors. So this is structurally in insolvency, not just a temporary imbalance. So debt servicing alone consumes over 60% of our revenue. There's also salaries to pay, there's pension, there are overheads, and most times these are constant reminders for government. So there's any government that comes into power, of course you have to pay salaries, you have to pay pensions, you have to look at recurrent expenditure and overheads of the ministries, the agencies, and the departments. And already we use 60% of our revenue to do debt servicing. And this is quite very appalling at this particular time, to know that 105% of Nigeria's government revenue in 2025 has been taken over by salaries and debt servicing. So living with the government with little or nothing for capital expenditure. All right, so because of this issue, capital expenditure in Nigeria now is largely financed by borrowing. Capital expenditure is largely now financed by borrowing. All right, so why this is happening is that there's been a narrow tax base in a population of over 200 million people. There's also been over dependence on oil revenue over time. There's been weak tax compliance. A lot of people do not pay tax. I think let me just break this down. Right, we have a population of over 200 million people, but the tax base is quite very small. How many persons in this population of 200 million people are taxed, right? So we could just have maybe just, let's just say 40 million Nigerians that are paying their tax. And when you look at the infrastructure that needs to sit down for 200 million people, the infrastructure that you need to construct for 200 million, and you have just 40% contributing to that particular payment system, our tax system. So you see that we have a problem. The tax base in the nation is not that wide enough. And we hope that with the January 1 tax reforms that will be introduced into the country, that we could have a broader tax base to be able to shore up more resources, because this is not sustainable. 105% of our revenue goes into salaries and debt servicing. 64% or 60% of our revenue goes directly into debt servicing. So what now remains for new projects, right? So it's becoming very alarming, very difficult to run the government. But these are things that we must do. Nigeria at this moment was widen the tax base to be able to put in more people into that tax base, to raise money for the things that we have to do in our country and in our economy. There's also been over dependence on oil revenue. That cannot be overemphasized. From early 2000, Nigeria has been deeply dependent on oil revenue. So we wait to see how the slide goes in the oil markets, and this contributes to the problems that we have. There's been weak tax compliance, even for people that are in the tax net. A lot of Nigerians do not want to pay tax when they should, and this contributes to having 105%, because the government needs the money to pay salaries. They need to do the debt servicing, but if enough money is not coming in as a result of tax, people don't want to pay tax. Some companies are not tax compliant. They feel that they can not just do anything and walk away with it. There's a serious structural problem. And this is one of the reasons why we have this at this time. There's also been large cost of governance. Of course, our governance structure is quite very large with the bilateral legislature, the House of Assembly and the Senate, right? You need to pay salaries, you need to pay legislative heads. There's a lot of persons on the line, and that is one of the reasons. There's also been a rising interest rate on domestic debt. The interest rate is increasing, so we need to pay more. So Nigeria has increasingly been in the borrowing trap. We've been in a trap borrowing, right? We've seen where governors borrow to pay salaries, where the country borrow and to be able to pay FAC allowances to governors, all right? So to pay salaries, we borrow to pay old debts, or to service old debt, and this is not reliable and realistic. To fund basic operations, sometimes we still do borrow. This is not sustainable, and economic consequences could lead to reduced infrastructural spending, inflationary pressure, exchange rate instability, reduced investor confidence, intergenerational debt burden, and global comparison. Healthy economies spend 30 to 50% of revenue on debt servicing. Nigeria spends more than double. So the fundamental question is, how long can a government survive when borrowing replaces revenue in Nigeria? And that's a question that we all need to be able to answer as Nigerians. But at this time, it is what it is. 105% of our revenue is being spent on debt servicing and salaries at the moment in Nigeria. The fundamental question: how long can Nigerians as a people, and Nigeria as a country, continue to borrow to replace revenue? Quite very sad. We have to revive and think out of the box, and thank God that with the removal of subsidy, there's more funds now. So we are not doing 125 at the moment, we are doing 105, but can we drop it to 50%? Salaries and debt servicing can take 50% of our revenue, then the rest will be invested into key sectors of the economy like health, education, sciences, technology, agriculture, and transportation. Those are key sectors of Nigeria's economy that we need to invest. But let's take another story now. Investors push for Lagos-Calabar Coastal Highway concession. All right, so investors push for Lagos-Calabar Coastal Highway concession. So investors are pushing for the concessioning of the Lagos-Calabar Coastal Highway. All right, so this is what investors in Nigeria are pushing for at this moment. So the Lagos-Calabar Coastal Highway, one of Nigeria's most ambitious infrastructural projects, is one, we've seen it, that this is actually one of Nigeria's most ambitious infrastructural projects at the moment. All right. So the highway would link major ports across the country, connect oil and gas assets, support tourism, reduce logistic costs, open coastal economic corridors. And while concessioning is necessary, Nigeria lacks the fiscal space to fund mega infrastructural projects entirely through public spending. But under a concession, private investors will finance construction, government reduces debt exposure, risks are shared, efficiency improves, and economic benefits could be a faster completion because there's enough capital, enough money to do the projects, job creation, lower transport costs, private investment along the corridor. And but there's concern from the public if Nigeria goes into concessioning. There's a concern about total affordability, environmental impact, transparency of contract, long concessioning tenures, and concession are not the problem, but weak governance is at the moment. And a group of investors are coming to push for the concessioning of the Lagos-Calabar Coastal Highway. Let's take another story before we take the last story this morning on Business Point. I tell you that Custom deepens ties with American Business Council. All right, so the Nigerian Customs Service has strengthened engagement with the American Business Council, a move with significant economic implication All right, so why this is important is that the U.S. remains a key trade and investment partner for Nigeria. So efficient customs systems will help us to be able to reduce trade costs, improve investor confidence, increase non-oil revenue, enhance competitiveness, and these are some of the things that we could leverage on this particular ties, deepening of ties, and this particular meeting between Nigeria and Nigerian Customs Service and the American Business Council. This could be a shift for us economically, with the implication that the U.S. remains a key trade and investment partner all over the world. So we are going to be having more efficient customs service, reduce trade costs, improve investor confidence, increase non-oil revenue, enhance competitiveness. And some of the focus area that the customs are looking at this time is digital custom processing, faster cargo clearance. We need faster cargo clearance in Nigeria at this time, transparency and predictability, trade facilitation over enforcement, and the broader impact could be lower port concession, reduced corruption risk, increased foreign direct investment inflow into Nigeria at this time. Custom reforms is not just administrative, but could also be economic reform at this time. So we are seeing Nigeria talking to the American Business Council to be able to deepen ties between the Nigerian custom to increase our non-oil revenue. And this is something that, as Nigerians, we must be interested in increasing our non-oil revenue to be able to drive the country forward and make more foreign direct investment into the country. Let's take our last story for our business points this morning. Pencom recovers 4.04 billion naira in unpaid pension. All right, so Pencom recovery of 4.04 billion in unpaid pension contributes, highlights improved regulatory enforcement. And why this matters for us in Nigeria is that our pension protects workers' future income, social stability in the country, long-term savings culture. And the state of Nigeria's pension assets in Nigeria at the moment exceed 18 trillion naira. One of Nigeria's most successful reform has been in the pension sector. At the moment, we have over 18 trillion naira in assets, in Nigeria's pension assets, and that is quite fantastic. Right, so it provides domestic capital for investments, pension funds, support infrastructure, financing, deepen capital markets, reduce reliance on foreign borrowing. But the challenges that we have, there's been non-compliance by some employers who fail to put their employees into the pension scheme. There are some employers who are not part of that particular Nigeria's pension scheme. All right, so it's a contributory pension where you do some percentage as a worker and your company also does some percentage. So state government areas, there's been informal sector inclusion of recent. All right, so this is actually very important, and we've seen Nigerian pension company recover 4.04 billion in unpaid pension, leading it back to Nigeria's pension assets of over 18 trillion naira. Amazing. These are monies that are available at the moment and could be able to drive a lot of investment into Nigeria, deepen capital market, reduce reliance on foreign borrowing at the point, could even go ahead to support financing, although that's a story that a lot of persons feel that we shouldn't use pension funds to do investments. But it is what it is. The money is there, and if we are sure and we are able to fund capital projects with it and replace the money as it went due, why not? If not, if you ask me from an economic perspective, I'll say it makes sense. Instead of allowing monies and assets to just lie for low, it's very, I think it's good to go into investment. But I'm not the economic advisor of the government. They have their team, and at the end of the day, they take decisions that they think is in the best interest of the country. But these are the stories that we're able to look at this morning. Nigeria imports what it should produce, borrows what it should earn, and it is struggles with fiscal discipline, shows promise. There's been a lot of promise in private capital and institutional reform. But the bigger question is, will Nigeria reform fast be fast enough to escape this particular circle. So Nigeria's economic future depends not on promises, but on implementation, discipline, and institutional strength. All right. So that concludes Business Point today. My name is Ubong Osoro. Thank you for listening. Like I say every day when I come on the program, global television means business, and you must do business. Bye for now.